what is UTI Long-Term Equity Fund tax saving, and what is the portfolio construction approach followed for the fund?
Thanks, Arpita, for the question, and hello everyone. UTI Long-Term Equity Fund is an equity-linked savings scheme. ELSs are widely known for their tax benefits under Section 80C of Income Tax Act 1961. As per SEBI classification of funds, ELSs invests a minimum of 80% of its corpus in equity instruments with no market cap restrictions. The fund is managed with no bias across the market cap spectrum. The fund follows a blend style for identifying stocks from both growth and value pockets. The investment philosophy of the fund is to focus on companies with good cash flow generation, healthy balance sheet, and valuations which the fund believes is reasonable based on long-term growth potential. The fund takes judicious calls at sectoral level and looks to generate alpha through superior stock selection, particularly in mid and small caps. As a part of investment strategy of the fund, it invests in three key buckets of sustainable businesses or compounders, transformation or turnaround opportunities, and cyclical opportunities. The fund's bottom-up approach of picking stocks across the three buckets results in a well-balanced blend of both growth and value.
Is there any framework followed under the fund for sectoral and market cap allocation?
The fund has a lock-in period of 3 years, which allows the fund to take reasonably higher exposure in mid and small cap stocks and be patient with them. The fund looks to keep mid and small cap exposure in the range of 35 to 45%. But to mitigate the risk of higher exposure to mid and small cap, the fund avoids taking significant sectoral risks, which one will generally see in pure growth or value oriented strategies. This also leads to a blend investment style for the fund.
What are the sectors of opportunity that a fund is currently having significantly higher exposure?
As a philosophy, we avoid taking significant risks at a sectoral level and focus more on stock selection. Having said that, currently the fund has large underweight in oil and gas as we have no exposure to the largest company in the sector, which derives majority of its value from non-oil and gas sectors like telecom and retail. The fund has overweight exposure in other pure play telecom and consumer services companies to offset that. We also have overweight exposure in the automobile sector as we believe the sector is coming out of a downturn which is seen for last 3-4 years. Thanks everyone for the patient listening.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.